Today, I want to break down a 6 steps process that you can consider that's going to change how you see trading forever. Now, I don't want to burst your bubbles or your hopes, but let me tell you this. There is no best strategy out there. Trading is 95% you and 5% your strategy. Okay, so even with the best strategy, okay, most traders still find themselves facing the same issues. So forget about all those videos that you see on YouTube that says this strategy made me this and that. I tell you what, they are all BS. So today I'm going to share with you 6 steps that you can think about and consider in developing your own strategy that is going to work for you. Let's dive into the system. So here we are on step 1 is time frame. So you have to consider and ask yourself, what time frame will be best suitable for me? Because already we have established that your trading strategy is 95% you and 5% your strategy. So before your strategy comes in, you have to ask yourself, what time frame am I going to trade with? Okay, now the answer to this question in selecting your time frame depends on the kind of personality or your person that you are. Right? Do you have time? How much time do you have? If you don't have time, how much time do you not have? There are persons who are comfortable trading in 1 minute, 5 minutes, 10, 15, 1 hour, okay, 4 hours, 1 day, 2 days, 3 days, okay, a month, and all of that stuff. So what time frame do you want to trade on? Okay, now this also boils down to asking you the kind of trader you are. So what kind of trader are you? Are you a scalper? Are you an intraday trader? Are you a day trader? Or are you a swing trader? So if you're a scalper, you might want to consider trading in 1 minute to 5 to 15 minute time frame. Okay, if you are an intraday trader, which means within the day, within 24 hours, you go in and get out of the market, you also want to consider taking your trades in the 5 minutes time frame, 15 minutes time frame, and the 1 hour time frame, okay. And then if you are a day trader, as a day trader, you want to consider trading from the 1 hour time frame to the 4 hours time frame. Okay, and then if you are a swing trader, okay, you might want to consider looking at the 4 hour time frame first, down to the daily, down to the 1 hour. So as a day trader, a swing trader, you basically want to start looking at the day chart, okay, the daily time frame, down to the 4 hour time frame, and down to the hourly time frame. Okay, today I'm making this video on a Saturday. The market is closed, nothing is happening. That is why everywhere is paused, nothing is going on in the market. Okay, so that's the first point you want to consider. What kind of trader are you? If you are a day trader, good. Consider looking at the daily chart and then down to the 4 hours and then down to the 1 hour. Okay, and then you can also consider looking at your entry time frame. Okay, like many people I know who they trade, they like using the 4 hour even for their entries. Some do well with the 15 minutes, okay, time frame. Some do well with the 1 hour time frame. What works best for you? Now, if you haven't known the kind of trader you are yet, I can help you. Hit me up on a message, okay, and I can help you go through, give you some quiz to go through, and then you can determine the kind of person that you are that will fit into your trading style. So point number 1, what kind of trader are you? Are you a day trader, an intraday trader? Are you a swing trader, or are you a scalper? So have this at the back of your mind when looking at how to create or developing your own trading strategy. Now, so we've got that settled. Now, step number 2, find indicators that help you identify a new trend. Now, if you are the kind of person who is comfortable trading with indicators, okay, you want to consider, looking at some indicators that can help you, identify a trend if the market is trending up or downwards, okay? And then you can come here to the indicators. I'm using TradingView, and then you can put what kind of indicator that it is you can use to identify a trend. Like many persons I know use the moving average indicator. Okay, so a click on the moving average indicator, see what we have here, and this is the cross moving average indicators. Okay, so this is how it is. And now what do they say? According to this indicator, they say whenever there is a cross, okay, whenever two lines, okay, crosses each other, the trend has changed. And if it is upward, you're going to know. So here, let's consider this for instance. Okay, let's look at this one here, this one here. So what do we see? We see the both lines, they've crossed here. And what do we see? We see all the candles running below the indicators. And what does that tell us? According to the indicator, we are now in a downtrending market. Now when the candles closes above the indicators, it's an uptrending market. Now I'm not here to tell you what indicators to use or not to use. I don't know if you are comfortable trading with indicators or not. However, it might be something you want to consider in looking for an indicator that can help you to identify a market trend. Give it a try if you're interested in trading indicators. Okay, now the next step you want to do is find indicators too that can help you confirm the trend. Now let's go back to the chart. What other indicators can you now use to confirm if this trend is actually trending up or downwards? Okay, now let's move down to the lower time frame. Let's say 1 hour for instance, and now let's go back to the indicators handle and type in relative strength index indicator. Like many persons I know, they use this indicator to determine and to confirm their trades. Now an indicator you might want to consider using to confirm a trend is this guy right here, the relative strength index. Okay, so we have the stochastic on the board, on the chart rather, and we also have the relative strength index. Now what does the relative strength index indicate, or what does it tell us? It tells us that once price travels below the low of the relative strength index, that tells you that the market is oversold. Okay, and what will happen is that prices will push back up. Okay, and so once price trades above also the margin of the relative strength index here, like you can see here, okay, it tells us that the prices are going to crash lower. So you can use these both of them, right? Look, you can use both to confirm if you are actually on the right side of the market. So this is an indicator you might want to consider. I'm not suggesting you do that. I'm only telling you these are things you can consider in developing your trading strategy. The fourth point we want to consider is define your risk. This is very, very important. So before entering into any market, any trade whatsoever, you want to know how much you are willing to risk. Okay, and for you to do that, go and learn some money management calculators and how much you're going to risk. For instance, you might want to consider risking 5% of your account, or let's say if you have a $100 account, you might want to consider risking $5 or $10. Okay, so how many pips, how many contracts are you going to buy before you hit your stop loss? Okay, that is very, very important, for you to consider as a trader. Your survival in the forex market depends on your risk management. Do not take it for granted at all. Like, in no way should you ever take your risk management and then calculating your risk for granted. It is vitally important that you do so. Now let's move on to the next point we're going to consider in determining you're developing your trading strategy is define entries and exits. You have to have a system to know when you are going to enter the market and when you are going to exit the market. That would mean you learning about levels. Okay, learning levels in the market where you think prices might tumble or prices might go up from that area. Okay, areas of supply and demands, like they say, areas of resistance and support. Okay, you have to have a system in place, or that knowledge, okay, to know that okay, at this level prices will either go up or go down. It's going to hit the roof, get some liquidity or whatsoever, and go either up or down, or I'm going to get caught in this level, so I'm not going to enter the market at this level. You have to know where to enter into the market and where to exit the market as well. And then the sixth step you want to consider is writing down your rules and following them. Listen, one time ago, a mentor told me, if you want to become successful in trading down the line, you have to write down your rules. Okay, I am going to do this. I'm not going to do this. I'm going to wait for this confirmation or that confirmation. I'm going to wait for 4, 5 confirmations or not. I'm going to, like, you must write down your own rules of trading. Now, if you don't have your own rules of trading yet, okay, you are still in the process of developing one and you want to develop one, like I said earlier on, you can hit me up and private message me, okay, and then we can help you develop a trading strategy and your own rules, okay, that will help you enter and exit the market. So do your best possible in considering these steps in order to develop your trading strategy. If you remember at the beginning of this video, I told you trading is 95% you and 5% your strategy, okay? And even with the 95% win strategy, okay, many percentage of traders who are able to use it are just 5%. Okay, so the majority of people, okay, find it difficult to work with it. So you have to develop your own trading strategy that's suitable to your lifestyle, suitable to your personality, suitable to the way you see and perceive the market, suitable with what you have learned and gathered so far, your experiences from your failed trades and your win trades. You have to put all of this together, and most especially your entry and exit plans and writing down your trading rules. All of this come together will enable you to develop your own trading strategy that is customized for you alone. Now, I hope these steps are helpful to you, and until I come your way again, I'm down the line, and I wish you success.